Hello guys, my name is Gavin. Welcome to M Trading's webinar. So today's webinar will cover trading systems. So we'll be talking about a particular trading system. The trading system that we will be covering is known as the pivot point bounce system. Very simplistic trading style, strategy. I will go into the background in regards to how it was used and why it's been used. In addition to that, I'll give you examples on the chart itself and then how to place your trades around that. Okay, so pivot points. What are pivot points? Just to give you a lowdown of what the pivot points are, these are your support and resistance levels, but they're not based on price action as you view it on the charts itself. It is placed by a calculation. Yep. So let me give you an example of that. What you'd have is 7 lines. You'd have 7 lines on your chart. Yep. 7 lines. You have the midway point, which is known as your PP. That is your pivot point. This calculation is based on the previous day's high, low, and close. Yep. So you take those 3 pieces of information, you divide that by 3, and that gives you the current average price or the starting price of that day. Yep. So this is where you'd expect the price to be. And then you have above that 3 levels. You have 3 levels above that. Each level is known as resistance 1, resistance 2, and resistance 3. Those are your 3 resistance levels above the PP point. And then below you have an additional 3 levels, which is your support levels. Support 1, support 2, and then support 3. Now, each one of these are unique from each other, so they all have different calculations based on the previous day's high, low, and close range. It takes those details and it gives you support and resistance for the current day. So therefore it is a leading indicator. So it's telling you the current support and resistance levels of price action. But do remember, this is a predictive secondary indicator, not a primary indicator. So you would use your primary analysis. In particular, you'll be using candlestick analysis to differentiate whether it's a good trade to get in or it's a trade you would stay away from. Right, where do pivot points come from? As we know, okay, pivot points is a mathematical calculation taken to place these support and resistance levels. They are 7 levels, as you can see. It is a predictive and it is not lagging. It is a coincident indicator in that case. And how has this indicator been formed? So this was originally formed by floor traders. So the traders that you see in the pits, the ones that used to shout buy, sell, they used to originally, they didn't have charts. They would go based on price. So they'll see a ticker board, they'll see price crossing, scrolling through, and as it's scrolling past, they know these price levels, they would work out the pivot points. Yep, so they would manually work out the pivot points on a calculator or by hand, and they know their support and resistance levels. So when the price of a specific asset gets to one of the support and resistance levels or the pivot points, they will then determine whether the price is going to break through or bounce off that level and place their trades through that pivot point. So that is the idea. So remember that this is used by floor traders. Now if you're asking me, how much of the market is now floor traders? You may say most are electronic based, most are doing everything on the computer system, but actually the actual fact is 45 to 55% of the market are still manual traders. These are traders that will call up their brokers, call up the institution, call the prime brokerage and ask them, okay, can you give me a price for this asset? And then place their orders. But even though we know it's midway point, but we are seeing a significant transition going to electronics. So everything, it will be electronic based eventually, but for now it is split 50-50. The reason why it's split 50-50, there may be more retail traders doing it electronically, but the amount of quantity that they're trading is significantly less than the manual traders, because the manual traders are usually your professional traders, your institution traders, the ones that trade in millions and billions rather than trading in thousands or hundreds of dollars. Yeah, so that's the difference there. Okay, guys. Right. So this system is for short-term trading. Yep. So this system is short-term trading. So whatever the time frame you're viewing, whether it's a 1 minute, 5 minute, 50 minutes, all the way up to a 1 hour time frame, you would want to view the daily pivot, so the previous day's pivot. But it can be used on a longer term basis. You can use this for so for the daily time frame, but if you're looking to use the daily time frame, you wouldn't look at the daily pivots, you would actually look at the weekly pivots. If you're looking at the weekly time frame to do your analysis, then you would look at the monthly pivots. So it goes hand in hand in that way. So you look at the higher time frame pivot points to view where is those key support and resistance levels. Now, assuming price is moving, it's worked out as pivots, so this is where we are currently. Yep, as we see this price, so from where the current price is from the PP level, generally the movement up to R1 or S1, the probability of that taking place is generally in the region of 70%. Yep. So it's 70% likely to move higher or lower within this range. Yep. That is generally seen as one standard deviation. In addition to that, to move from PP up to R2 or S2, that is only a 50% probability there for both. So 50% probability, which is also known as two standard deviations in this case. Yep. And then to move from PP up to R3, it is only 33% likely to get to that level. That is seen as extremely overbought or oversold. So that is 3 standard deviations away. Yep, so we don't expect, if market gets all the way up to R3, I will be looking for more selling positions at this point, so a rejection to take place rather than a breakthrough at these extreme highs and the extreme lows. Do remember that, yep. Okay, so that covers the pivot points, guys. So that gives you a better understanding of the background and how to use the system. Let's go into what is the trading strategy. Okay, so let me remove this off the charts and let's add the pivot points. Let's get to a 5-minute time frame. Let's move closer to price action there. And in addition to that, let's add the indicators. Go to your indicator list. There's under custom, and then go to M trading pivots. Yep, so M trading pivots. You can have a box that will pop up such as this. So this would be shown in all time frames. You can set colors, input details. Yep, but let's keep them at standard. And as you can see, that is where pivot point is currently. Yep. So the idea is we want to view what price action does around these support and resistance levels. Now this is where candlestick analysis comes into it. You have to combine these pivot points, yep, so this automatic indicator that's placed on your charts with candlesticks. Candlesticks is also a primary indicator and gives you a better indication of the short-term sentiment of the market. So we're looking for an impulsive move to take place, get up to R1. So when we see a candle that gets up to R1, such as that, yeah, then we're looking for that initial candle to hold that pivot level. In this case, the R1. Once it holds this level, we want the next candle to show some rejection to the top end. Yep, so as we have a rejection candle such as this, and this is known as a shooting star candle. Yep. So this shows us that, okay, we went on to test that high, tried to break through, but the traders come back in, sellers have taken control, and we're back within the R1 level. So there is a short-term indecision along with a potential reversal that could take place. But I wouldn't get into this trade as of yet. The idea is we need confirmation. Always wait for confirmation. A perfect example of this is you wouldn't stand in front of a train expecting it to stop and turn around. What you want to do is wait till it comes to a halt, let it turn around, and then get on the train in that direction. Yep. So don't try to catch a falling knife. Right, so we're waiting for that confirmation. Confirmation comes through, such as that. Once we have the confirmation, you want the break below the previous candle, such as this one here. And that will be your entry point. So your entry point will be through this level here. Yep. So that is my entry. My target is to the next pivot point, ideally within the pivot point. We're not looking to take a target in extreme cases. We want to take a target within a realistic level. So my target is placed within the next pivot point level, and then my stop loss is placed above the R1 in this case, so above the pivot point level. In addition, also place some significance to the candlestick wicks also. So I'll place my stop loss just above this wick high, and that will be my stop loss placement. And I'm expecting this to continue down to my target. Yep. And if it does go on to break up to the top side, it will hit my stop loss, and I'll be out of the trade as soon as quick as possible. Yep. Remember, this is based on very short-term trading, so you do this in the 5-minute. You could take multiple trades throughout the day using the system. The benefit of this system is, for example, if we see the market move up, go on to test this level. So when to test this level, then it actually holds this level, so the next candle holds this level, and then eventually it breaks through this level such as that. I could take this trade. I could take this trade, enter at this point, and then place my stop loss below the swing low in this, so below the pivot and below the swing. Yep. And my target could be to the next pivot point, which will be the R2 in this case. Yep. And as you can see, the risk I'm taking, yep, so the risk I'm taking from here to here, assuming that this is a risk of $100, I'm looking to achieve 3 to 4 times that amount. In this case, the upside is $400. So the reward to risk ratio is good. So you'll be looking for 3 to 1s, 4 to 1s. Therefore, I would not look to trade this with a 1% risk per trade. Yeah, because you're going to expect more stop loss hits, so it will have a lower hit rate. So for example, out of 10 trades you take with this setup, 4 may come through, so 4 will work out. That is the average hit rate in this system, so 40%. But if you're making 3 to 1s, 4 to 1s, that would eventually make you a significant amount of profit. But if you're only looking for a 1 to 1, that would not make you a profit. And in addition to that, if you're risking 1% per trade, that also can leave you with a large loss at the end of the day. So go in, instead of a 1%, go in at a 0.25% or a 0.5%. So that allows you to take multiple trades on a daily basis. So this example here is known as the bounce. This is the bounce system. What we're looking for is price action to come up to a pivot point, hit the pivot point level, reject that level, and then break to the other side. Yep. And this one over here is known as your breakout. So this is the breakout of a pivot level. So it goes on to test. So it goes on to test the pivot point, some rejection, some indecision, but then eventually it breaks through. So a lot more buyers in this case breaks through this level, and then yes, you're looking to target the next pivot point. And that's how simplistic this trading system is, guys. Yep. Okay. So please do go through this system, guys. This will give you a better indication of short-term trading sentiment because you're viewing candlestick analysis. In addition to that, you're using your support and resistance to place your support, to place your stop loss and to place your target level, and to define when you are looking to enter the trade. Another key point I'd say is if we see price action, do something like this. So price action moves up, hits the R2, bounces off, bounces to the R1, goes to the R2, and then does something like this. So the likelihood now, guys, is what, guys? If we've seen once and twice previously, we've rejected this R2 level, it's more than likely to do the same thing again. So if it does something like this, breaks lower, again, that will be another potential trading setup. Stop loss above the high, your target to the next pivot point as it's respected it twice before. And then that is what you're expecting again. Yep. So that is the idea, guys. You'll be trading the breakouts and the bounces of the pivot point system. Okay. So let's go through some of the charts over here. So as you can see, so a perfect example would be if I now just zoom in slightly and let's go scroll right to the right end. Okay, so we know this is our pivot point here. So a perfect example is, have a look at this, guys, where you can see price action It's going sideways, so this is sideways market, goes up to test the pivot, one rejection there with a false breakthrough, but again a rejection, sell-off. Doesn't actually get to the pivot point, doesn't get to the S1. That happens in certain cases. That's where trade management comes into this. So if I'd entered, say, below this level here, the stop loss up there, my target was in this range over here. As this continues lower, you could see these pullbacks taking place. So that's a pullback there, stop loss has moved to this level. Another pullback over here, so that stop loss moves to this level, this stop loss moves down to this level, and I'm already in profit and locking in significant profit. Again, we have the next pullback in this region here, that's the next stop loss over there. So remember to manage your trade with the swing highs, with the candlesticks. It is extremely important. Yep. Okay. So let's go through another potential setup. So yes, we can see a number of touches at this area here. So we've got 1, 2, 3, 4, 5 significant touches in this area here. And what has it done recently? Let me just scroll to the right hand and let me zoom in a bit more. Okay, so as you can see, that what I'm seeing at the moment, and this is the Aussie dollar chart on a 5-minute time frame, guys, we're at the spot 76.12 level. What it's doing currently is testing this pivot point level. So we're testing this pivot point level at the moment. It's broke through, so we see this breakout taking place. But what happens? Rejection over here. Rejection, bounces back and retest the pivot point level. Again, breaking, doesn't break that previous high. It doesn't break that previous high and comes back down. Significant test against another significant test, so we could potentially see a trade to take back up to this level here, so back to that previous high. But if you're looking for a longer term setup, then you could wait for it to break out of this range. So once we break out above this previous two highs, you can have a stop loss in this area here, because you know this pivot point is being respected multiple times, and look for a target up to your R1. So guys, this is your task now. So your task is to go through multiple assets, add your pivot points, and look for the breakout and the bounce system. Yep. Use the Aussie dollar, come back to this the next couple of hours and see what this has done at this key level. Does it go to reject this level and hit T1 and potentially even T2? Yep. Okay guys, thank you for listening. Have a good evening and I will be back with you next week. Take care guys. Bye-bye.